So a blow for indebted South Africans. The Reserve Bank's Monetary Policy Committee has raised the repo rate at which it lends to commercial banks by 25 basis points to 6%. That means the prime lending rate that affects most consumers rises to 9.5%. The bank is acting preemptively because inflation is expected to breach its targeted ceiling of 6% by next year. Raising interest rates has the effect of ensuring there is less money in our pockets, basically, which means less spending and a slower rate of price increases. The problem is that higher rates can also curb economic growth. Now, if we look at what happened after the global financial crisis, the bank dropped rates to encourage growth, taking an accommodative monetary stance. For a long time, the repo rate was at this 40-year low, only 5%. Then in 2014, the first hike came, but that was followed by more concerns about growth. The next hike came about 6 months later, and now we've waited a year for another rate hike, but it was cautious by only 25 basis points to 6%, the repo rate, and the prime rate always significantly higher, so about up here at 9.5%. Now let's take a look at how this will affect you if you're paying off a bond. If you look at a 200,000 Rand house, a bond for that, you won't pay much more. Your repayment rises by about 30 Rand. It becomes more significant as we go up the scale. If you're paying off a R1 million house, your repayments go from about 9,159 Rand to 9,321. So the difference there, less than 200%. Now, it becomes more significant, a R2 million home, if your house is worth that, and you're paying prime, your payments will rise by about 300 Rand per month.